everybody. Welcome to the TraderMerlin Show. Happy Monday. Happy Amazon Day out there for those of you who are following the NASDAQ. It would all be falling apart if it wasn't for Amazon today. Siraj, thank you so much for starting off the show with a great contribution. Love that. It was awesome. Thank you for the donation. We appreciate that. Over the weekend, I was kind of looking over show topics, and I was thinking, I had so many different perspectives and takes on pre-market trading, and I know that Tillie spends a lot of time in that arena, so I thought, you know what? Why don't we do a show today talking a little bit about some of the pre-market trading analysis and using that Globex market that I know a lot of you might be doing. And of course, who would help me wade through that is none other than the lovely and talented Tillie, Allison-Harris. Tillie, how you doing today?
Great, Merlin. Glad to be here.
I'm glad to have you with us. Do you have a good weekend? Did you do anything fun?
I had a fantastic weekend. My little guy turned 1 year old last Thursday, so we celebrated over the weekend. And he had his first little few bites of birthday cake. That was great. We went swimming. Had a great time.
Nice.
And then today I actually thought it was like Monday Night Football already, so I'm just having way too much fun. But apparently it's only baseball season.
Yes, baseball season. Half a season this time? I don't know. It's kind of like saying, let's have a half a trading year. It's not going to work for me. It's not the same. All right, well, cool. Glad you had a good weekend, and happy birthday to the little man. First of many to come, I'm sure. Let's go to our topic du jour. When you first started out, I don't want to bring people through the entire story of Tillie's evolution as a trader, but I made fun of her at the beginning, called her 10-tick Tillie, because she traded the Dow futures, and she traded for 10 ticks, and then she upgraded and started trading the S&P, and then started to trade other asset classes, and now trades just about everything. The pre-market area is an interesting topic because a lot of people like to trade just from regular market hours, 9:30 East Coast time to 4, and that's it. Truth of the matter is there's a lot of other activity that happens out there. So walk me through a little bit about why you like the pre-market, what it means for you, and then we'll talk about how we trade it later on.
So Baylor here also gets up really early. She's up at like 4 in the morning. She's my trading cat. So I encourage anyone that's up really early in the morning, or if you're on a different time zone, probably in the evening, things are 24 hours. So before the stock market opens here in the States, there's a lot of activity in the 24-hour markets, and that's the currency markets, the Asian markets, the European markets. So by the time the stock market opens, it's like late news. There's a lot been going on in the Australian market, Japanese market, and the European market, and all the money flow coming into the States, though, before the open, because margin rates here in the States and the U.S. stock market is such a popular market to trade. There's a ton of volume, if you will, coming into the market, pre-market, and we can see where the big boys are buying and selling, kind of giving us a sentiment before the open.
Now, there's and this is the discourse that a lot of instructors have, which is you can't really believe that information because during those pre-market hours, and I'm playing devil's advocate here, I'm not saying that this is right nor wrong, but they'll say that during those hours, the professionals aren't obligated. They're not forced to be in the markets and be active, so you can't really trust that pre-market or post-market data. What do you say to that?
I say that is probably not correct because the big companies are going to load the boat pre-market, or their orders won't get filled during the open if they're not already placed. So the way that order flow works, and I know a lot of active traders know this, but maybe investors don't realize this, if big companies don't place their orders pre-market before the open, they're going to be last in line. And therefore, the money flow coming in, when someone says that data may not be valid, I would agree that we have to be very careful, and we can't perceive a pre-market low for an absolute low until it's confirmed after the open. Mm-hmm. So like this morning, if you look at the S&P 500 futures at 3207, there was pre-market trading. And then after the open, there was a retest of 3207. So we do have to wait for the open session to validate those zones, if you will, those orders are being filled. But there's definitely some things to notice pre-market to kind of give us a heads up before the open.
It's funny you mentioned that. I have to scroll through here now and try to find the question that came through, because this is a question that came through from a listener. Actually, it was a comment posed as a question. Let's see. This is from Martin, and Martin said this morning, This morning I used the pre-market demand at 3206. I think I just heard you say 3207, Tilly, so you guys are like minds think alike. When the market opened, it fell straight to that demand and bounced. Do you see this happen all of the time? And I think it might be an interesting question to pose to the viewers out, or to you, because I looked at the chart, and yeah, I was watching that level this morning, and it did. It came right down to it. It was a perfect little bounce out of it. I'll show it to the viewers out at home so you guys can see it. We'll put a vertical line, and I'm going to show you another thing here as I prep this. I just want to add in volume so you guys can see I think I actually have it enabled. So you can see how different it is during regular market hours versus post. And there you go. There's your 3206 line is right about there. You guys can see the vertical line I'm putting on your screen right now is where that market opened up. And I know it's kind of hard to see, so we'll fatten up a little bit, make it look a little bit bigger for you, just so you get a sense to when that happened. There you go. The blue dashed line represents right where we opened up. And you can see before that, at the bottom, almost no volume. After that, tremendous volume during regular market hours. And it came right back down, tested it, and bounced. So to go to Martin's question here, which was, do you see it all the time? What's your take on that one?
Oh, I wish it was a layup like that. You know, like in a lot of games, you got different plays, and we would call that a layup. So yeah, when the market drops down there in the first hour, retests a overnight area, and then moves in the direction of the trend, you know, coming off of last week's lows. A lot of traders would call that a layup. Sometimes, though, it's really difficult to find a particular area, and the market might bounce around quite a bit for the first hour trying to get it splitting, and then new zones are established after the open. So I would say that today, when it does happen, is awesome.
Yeah, I agree with Tilly. It's not that these things happen all the time, Martin. When they do happen, especially like I think you had kind of a perfect storm. Well, if you look at that chart, I'll bring it back up for you. It wasn't like a perfect demand zone. But it was a demand zone, or as accumulation, as Tilly likes to call it. You know, in making that trade, I think it actually turned out to be a great trade for a couple reasons. Number one, you have the demand zone and the aggressive sell-off. So basically, in the half hour of the market open, it fell right to it. Great. But then it also gives you an easy place to put a stop, which would have been right down below the lows of that demand zone. So you had about a 3-point stop on it. Okay, fine. You know, if you can handle that a loss in your account with the number of contracts that you have, then go for it. So it's not, you didn't have huge risk on this one. Ultimately, when you look in hindsight here, you had a lot of reward because it had just a beautiful move out of it and kept on going to almost the very close. But I'm definitely going to say you don't see those all the time. And if you do spot a demand zone or a supply zone, accumulation zone, distribution zone, as Tilly likes to say, it doesn't mean that they're going to always turn, right? This is just a probability game we play. I do personally feel like during regular market hours, I will have a little bit more confidence in supply and demand zones than I do in pre-market, just because of the illiquidity aspect to it. That's the only thing, my only cautionary note about pre-market and post-market trades.
Absolutely. Yeah, definitely. We know that kind of that pre-market can kind of be like a pre-game warm-up, and it can give an idea of who's going to win, but we surely got to wait for the game, if you will.
Right. Now, Tilly, does that same methodology work for you in the post-market session as well? I know that, you know, pre-market is I'm generally looking at the pre-market just because, you know, to me, it's the horse race is about to start. It's the horses getting into the stable, and you can see who's excited, how they're moving, and everything. Does the same thing work for you in the post-market? Because I don't really like to trade the aftermarket's regular hours, you know, going in the evening. I don't usually trade that. Do you?
Well, I use the aftermarket kind of more like a sentiment indicator for maybe what could happen overnight. But because there's so much settlement happening after the close, I would say that until the market's, you know, been overnight trading for a couple of hours, we really only have, you know, that settlement after the close is such a interesting time because all the activity of the day, you know, so the evening night session, I think, plays a little more importance. And if we're anticipating the market to continue to trade higher, which today's close suggests that it will, we would be looking overnight for confirmation that the market is continuing to show strength. Mm-hmm. I think one thing that can help in the overnight session, if all of a sudden, you know, news flash, if you will, happens, and let's just say that the market always moves before the news flash, and right. You know, so let's just say there's a bunch of selling for whatever reason. pre-market can really help us identify, and it could be in the overnight session. So whenever we say pre-market analysis, we could be looking at the entire overnight session to look and see if there's anything significant at all happening. And it really does help, I think, investors, even traditional investors, kind of get a bird's eye view of what's going on. So if there is something not good going on, we would likely see a lot of selling pre-market, and that would really help us anticipate that high volatility on the open.
You know, in a lot of the economic data that I talk about on the show, you'll see it manifest early morning. Like a lot of them are 5:30 in the morning, 6 o'clock in the morning, before the market opens. And a lot of times you will see the reaction to that. And what's nice about that is that can actually create some supply and demand zones as well, depending on the shape and structure of those zones. But the Globex session, guys, to me is critical because like it's Steph or Patrick's saying here, you know, it's that pregame, you learn a lot about the team when you watch them practice, how they're playing. There might be little strategies that they're showing you that you can use to your advantage. And I do believe that there is an advantage to using pre-market. Now, this is kind of interesting, Tillie, because one of my favorite traders out of Chicago, I hold this guy with the utmost respect. I think he's one of the greatest guys out there. Craig Weil. He says, and he's an old long-time floor trader futures guy. He's like, I don't pay attention to that pre-market stuff. I don't think it's very useful at all. And I was actually kind of shocked to hear him say that. But, you know, this is the beauty of financial markets is one person will look at it and say, I find it useful. Another one says, it doesn't do anything for me. And another one says, hey, this thing's really important. So I think you and I are both in the same camp that it's pretty important for us.
Yeah, I think people that were trained electronically to read charts and data, we see it as more of a, hey, what's going on? Whereas guys from the floor, when they got there, they found out, you know, so I think they sort of lived to trade using regular session. And when they got there, they got there. And, you know, for them to learn how to use electronic dating, from what I understand, was like a big deal.
Sure.
So I would think that they surely wouldn't want to be looking at any more charts than they have to. Unless you're like Bob Dunn. I think Bob Dunn loves 24-hour data. Yeah.
I mean, and this is the funny thing. They're both traders on the CME. So, you know, different strokes for different folks. Let's talk about that opening rush, because you said something earlier that I think spurred a thought or a question from one of our viewers. You talked about order filling, and for those that don't understand, when you send it, let's say the market's closed, right? The market's closed right now. It's I don't even know what time it is. It's 2:13 California time, so it's 5 o'clock on the East Coast. Markets are closed. You could go out and trade in the after-hour systems if you had access through direct access, but let's say you're not. You're one of these guys that doesn't really do anything, and you saw. You wanted to sell some shares. You said, you know what, I'm just going to put an order out, and tomorrow morning, my broker will fill that order. Well, what happens is there's this accumulation of dozens, if not hundreds or thousands of orders from a broker. They're going to look at that and say, okay, this client wanted to sell 1,000 shares of Microsoft. They will move their prices to where they want to be executing at, and all of that happens in that opening rush. And there's a tremendous amount of order flow that happens. And the question that came through was from Patrick, and he says, so Tillie, they get their orders filled from the open at 9:30 to about the noon doldrums, and that's not necessarily true. It's really more like the opening half hour.
Yeah, there's a tremendous amount of movement during the first half hour, and a lot of active traders anticipate a lot of movement during the first half hour, and some people love that and some people hate it. Mm-hmm. But then after that, we anticipate trends to continue. So we would say by the doldrums, the market's already moved quite a bit. And depending on the trend, that's kind of what we anticipate would happen throughout the afternoon. Like for today, the market to continue to rally in expectations that it's going to be trending higher after all those orders were filled after the open. So sometimes the market can go completely flat, after the lunch, the doldrums, if you will. But if there's a trend in play, then it likely continues in the direction of that trend.
Yeah, the for those that might be wanting to know more about the pre-market or order filling session, I wouldn't say it's stressful for these market makers because it's predominantly automated, right? They're putting most of the stuff in the system. They have computer software that will tell them, hey, I need to sell X amount of shares. What should be my average price? And it's fairly automated. You just have to know that these institutions in that opening 30 minutes they already have everything kind of pre-built, and they're being flooded with either buy or sell orders from the night before. And even on the open, there is some. That generally will take a little bit of time to execute, to balance out. And, today was really a good example. I'm going to not say textbook, but keep an eye, look at this chart, all right? Where that blue vertical line is, and I have it one bar off, that's exactly where we opened up. So it opened up, started to rally for just a couple of minutes on the S&P, and then you see 15 minutes of aggressive sell-off. That's order filling. And actually, it hit those same area of demand in the opening in that 10 minutes there, and then retested it again. So there was some quick action on the part of institutions to take this thing lower on the open. But after that, it never looked back and kept on going. And this is kind of I like to call it the magician side of the market, which is they show you something in one hand, but then they're doing some devious thing with the other hand, and that's where the magic happens. This, to me, is what it was. That opening half hour, it was starting to signal a pretty ugly down day. And if you didn't have the Globex pre-market showing, you probably wouldn't have seen that area of demand, which, not that it had to stop, but it was an area where it was likely to turn. And then you combine that with the 30-minute market sell-off, which is typical, like the first half hour. Today was a pretty darn good day for it out there. I like that. All right. Let me see. I had some other questions for you, Tillie. If you guys have pre-market questions, let me know what they are, and I will do my best to get them answered on today's show. This one came in and it was more specific to you, Tillie. This is from Heather. She says, Tillie, what are some of the things that you did to improve your overall trading results? And I know that you've been through a tremendous amount of exploration in your trading style over the years. So if you had to narrow it down, what are some of the things that you did to really help yourself?
Using higher time frames and being more patient. So the market's going to move with or without us. And oftentimes we have a habit of maybe getting in and getting out because, how often in life do you have an opportunity to get a quick paycheck, if you will? And although that can be very gratifying, just a couple points on the S&P 500, every point is $50. So it's kind of hard early on it's hard to stay in trades early on because all of a sudden you've got like $200. But what we don't realize is the market can continue to move in our direction. And if we just stay in that trade without doing anything, then we can make $2,000. And for me, that was a big wake-up call. Same amount of commission, same amount of planning. You make $200 versus $2,000. And trying to stay in trades longer has really been a challenge for me because I did such high-frequency trading early on. I think I was taught to short-term trade on a 1-minute chart, and I didn't realize that can be extremely habit-forming. And then you try to go back to hourly charts and weekly charts. So learning to stay in trades longer really did take a lot of work for me.
Yeah, I love that you said higher time frames. I've emphasized that point with the viewers a bunch, and it might be different for the other people, but most of the stuff that I've seen over the years that has helped people has been just taking a step back, getting out of the I guess the weeds, if you will, and taking a higher ground stance on what that chart looks like. So what I mean by that is the 1-minute chart can drive you crazy, and it's just nuts. It probably drove me nuts. Then I moved to the 5-minute time frame, and things got a bit smoother until he's probably using higher time frames than that. So what happens is you start to focus on the bigger moves, which of course have more profit in them because it's a bigger move. But it also prevents you from stressing out all the time and getting involved with all the boring little details that go on. And I think that's a very important thing. So Heather, analyze your trade, see what time frames you're trading on, maybe take a step back and look at the bigger picture. Bob Dunn's perspective, ride the waves. Yeah, Adam, that's different. Bob Dunn's perspective is a little different. Bob Dunn is like, don't even bother looking at the 15-minute or the hourly. It's all trash. That's where Bob and I will disagree. I think that there is some benefit to there, but everything in this, Tillie, how it's like scales, right? On one side, you've got a pro, on one side, you've got a con. On the con side, for looking at the bigger picture, you are not going to get the optimal entries. You're going to miss some of the move because you're not refining down to the microscopic level and pinpointing the exact entries. On the con side for short-term trading, when you're looking at these 5-minute charts, you might get jigged out a lot more. You might be doing a lot more trades and have much more frequency. So there's always a give and take here. And as long as you're aware of what they are, then you'll be fine. But don't hate on one style because it's not what you like, or hate somebody else's style because it's not what you like. Find your own niche and work with that one.
Yeah, I think that's what's important, is finding what works for us, because everybody's different, and realizing that we need all that difference in there to make this thing work. I love it whenever early on, I love teaching. So teaching trading is amazing. I love reading all the questions here because it sounds like a lot of you guys and gals are experienced. Yep. And that's awesome. But, imagine trying to explain this stuff to just, anybody who's a school teacher or a doctor, and that they don't even really know about this stuff, and you say stuff and their eyes just like come out of their head. And they're like, are you really saying that's what's going on? And we're like, yeah, I really saying that's what's going on. But for someone to wrap their head around time frames and the amount of order flow coming in, and if you're looking at a, daily chart, you're looking at, millions of orders, transactions occurring. And then when you look at like 5-minute charts and 2-minute charts, you're looking at only thousands and sometimes only even hundreds. Whenever someone really wraps their head around, and that's what we're looking at, I think then logically deciding what timeframes we want to use to reduce risk and increase reward, that's really, I think, where everything comes together.
Yep, and it's it's a discovery process. So for those of you who are experienced, you know this, which is probably why you're here, because it's reinforcement. And for those of you just starting out, you will learn it, and hopefully you'll learn from myself and Tillie and others in the room who are experienced in that area. We can help you overcome some of the pitfalls early on. Real quick, there was a question from Greg says, patience in trading, you mean don't try and fire off 60 trades a minute? You mean like I did? I mean, you're going back. Those are hotkey days, guys. And basically, I had a key that was set up to buy 1,000 shares at market. And I had a key to sell 1,000 shares at market or short. And I would just hit those all day long. And yeah, you make 550 trades a day. You're trading way, way, way too much. But yes, if you want to help yourselves, I would suggest do this. Put a limit on the number of trades that you can make per day. So for I like the gun analogy. You can have an AR-15 and just shoot all over the place, and you probably do a bunch of random damage, but you're not going to hit your target. If you put yourself in a nice 6-shooter and say, I've got 6 bullets, I have to take those 6 shots wisely because I only have 6. And if I don't hit my target and those 6 shots are done, then I'm toast. Same thing in trading. I think if you tell yourself, look, I can make 3 trades a day, 5 trades a day, 20, whatever your number is, then stick to that. Because what will happen is you will force yourself to be more structured, disciplined, and follow more of a routine as opposed to just shooting from the hip on everything that moves like I did back in the late 90s. My little random take.
Yes, and unless someone tells someone that, hey, if you get on a 1-minute chart and you're going to start rapid firing, they may not, know to watch out for that because it's really common. Most people either overtrade because we're trigger happy, and I'm totally guilty of sin. And then other people are really scared to pull the trigger, and obviously finding success is in the middle. So that's a normal thing for people to deal with. I always think it's like driving your car. Mm-hmm. Nobody can tell us how fast or slow to drive a car. And that sometimes I drive fast and sometimes I drive slow. So, finding which time frames to use, I think, to plan the trade is critical. And then depending on kind of also where your mind is that day, or, if you're an active trader, some days you're able to see things a little more clearly and you may be more comfortable that day refining things a bit more. And then other days you just know that you don't have, the mental capacity to be refining things so much on a lower time frame.
Yep, absolutely. Naum says, Merlin, how do I go about getting direct access? It depends on which brokerage firm you're using. If you have access to ECNs, generally that's going to be direct access. And what ECNs are, guys, they're just electronic communication networks, your ARCA, your BATS, and things like that. That's where you'll be able to direct your own order flow and route it to the market per your choosing. Most of the retail platforms you get right now, it's just simply hit the buy button and you don't know what happens between now and the time it's executed. A lot of different things can happen, but that's how you would get your orders routed directly and prevent intermediaries or middlemen in the process. TradeStation, for one, would be direct access. You have, who else we got out there that's direct access? What are you using?
Yeah, so though, that was a great question because a good friend of mine asked me recently if Trade Portal, Global Futures, AMP, so we really have to find out whatever execution order platform we're using, that the orders are going from our computer to the exchange, and they're not stopping at 10 different companies along the way. So it's really hard to tell these days because even companies like TradeStation, we know that the computers, their servers, TradeStation servers are not taking the order directly from your desktop to the exchange, that they're going through those TradeStation servers. And other platforms like Trade Portal, the interface that we download on our desktop or laptop, that interface, my understanding, is a little bit more of a direct route. So it can be a lot of direct access brokers, but depending on the company, some of them can have a whole lot more servers and stops along the way. Yep,
absolutely. And every one of those will stop, slow you down. So Naum, if you are with TradeStation, then you have direct access. And you'll notice you can find out by when you go to your equities tab and you go to trade stocks, you'll see it'll say route. So you can pick the route that you want to go. And there's usually many of them there. And it's really up to you. You have to kind of discover what those routes do and how they operate. There's different fee structures with them, but that'd be direct access. And generally that's the fastest, most efficient way to get there. For my genomes, ask what do I use? I believe it or not, I actually use a lot of online stuff. So I do my analysis and execute analysis through TradeStation, just because I like the platform. And again, if they keep giving me a hard time, I will move on from them. But also, like, I use Ameritrade's platform, I use E-Trade's platform, I use Schwab's platform. I use a bunch of different platforms out there to execute for various accounts that I have kind of all over the place. All right, let's see. I already went to that one question, I think. I already asked that one about.
I had a comment about somebody trading stocks on direct access brokers.
Yep.
Usually they have a technology that picks the router for you, meaning you don't have to choose like which electronic network. So usually in that drop down menu of any of those brokers, they have like an electronic network that you can choose that will find the fastest route for you because they want the commission, right? Mm-hmm. So they're working for you. And usually you don't have to pick like which network. They usually have like one word that would find it for you, and I would encourage to think about that.
Absolutely, yep. Just so you guys understand, the direct access, what you're trying to do is you're trying to prevent the firm that you're trading with from doing something, let's say, deceptive with your orders, from selling it to somebody else, front running that order flow, or whatever the case may be. You're not going to notice like that you get a 50-cent better fill, right? It's not like you get a major fill, but you can directly send your orders to a specific route. And when you look at level 2, if you're a level 2 practitioner, you may see where there is more liquidity. There may be much more transactional volume on one particular network versus another. And sometimes one network will not talk to all of them. It's a weird little thing that goes on behind the scenes, which we could do a whole bigger discussion on. Yes, Patrick, Tillie has a Facebook. I'm giving her a hard time because she's got a book, she's got all this market commentary, but she doesn't do anything on social media, so we need to all kick her in the booty and get her to get up on social media, Tillie.
I'm working on that, and I actually tried to post the market outlook on the Facebook page, and I think I did do a good job there.
We need someone to be Tillie's IT professional and help her through all this stuff. One last thing. This is a good one. Kingsley has been sending me some messages regarding this, and you use terminology that he's saying I just want some clarity on. He says, Tillie, can you please explain accumulation and distribution areas?
Yeah, absolutely. Buy orders. So accumulation is that over time, big companies out there buy stocks and futures contracts and sugar and wheat and corn. They buy these products. So when they buy them, they just don't buy all the units at one time. They accumulate them over time. So whenever we're looking at the market and we're looking for where we possibly want to buy or sell, we're looking to find out where the big boys are buying and selling. And these areas of accumulation are where they're purchasing those units. And that's always going to be below current price because price is where it is because they accumulated it. And then the area where they're going to distribute is up higher, likely where they distributed in the past. So we look at the market, we analyze everything on a price scale of low to high, and then we try to pinpoint where those buyers are low, where they've accumulated those shares, because if they're buying up those shares, contracts, they're likely to buy more. And if we can kind of get on board, we can join them. And then again, also looking for where we want to sell. Most investors, we sell because we get a little happy and we made some money and we just want to, celebrate, if you will. But if we can stay in the trade as long as we can until the big boys are selling, which those are those areas of distribution. Wall Street always says buy low and sell high. And we're just trying to put a little framework around it, if you will, of exactly how to do that.
Yep. People use different things. And one of the terms I don't like in the industry are support and resistance. It's just too vague. It doesn't tell us enough about the situation. Supply and demand is a little bit better because it tells you where those buyers or sellers are accumulating. And I guess that's kind of, Tillie prefers accumulation. You could say demand would be accumulation and supply would be distribution, right?
Absolutely. I prefer the term accumulate because it helps me think about all the activity that's happening there. Whereas supply, for me, doesn't specifically quantify it as clearly. It's just a term that I associate more with active activity happening there. Mm-hmm. And, whatever gets your brain to, focus and be able to make good decisions.
Tillie likes big words anyway, and supply is just much smaller than distribution. It sounds so elegant too. So it's the writer in you. Let's see. And Kingsley, thank you so much for the questions. Keep them coming. Pro35, this is a good one. He says, when is a limit order better than a market? Only with a small bid-ask spread. Not just a small bid-ask spread. Tillie, do you have a take on that one?
Oh, I do not encourage market orders at all. Is that the question?
I just said what when do you? It says when is a limit order better than a market order?
Yeah. So if there's a wide spread, we don't know what we're going to get, and you kind of want to know that. So if you don't mind paying the spread, then using market orders, usually we want to go between the spread with a limit order. So, whatever we buy or sell anything at determines our profit and our loss. And oftentimes the market order is a real gray area. So using a limit order, even if it's in a few pennies, can really give us a better estimate of our profit and our loss.
Yep. Sorry, I was reading Joseph's question here. Mike sent in a question, but Mike, I'm not going to answer this one today because I think this might be our topic for next week because Tillie's been kind of coming on once a week, which is what is Tillie's morning routine? I think that's great. I think I'm going to keep that one for next week if you come on, Tillie. We'll see what your schedule looks like. But I want to do that show with you because I think it takes a lot more time to us explain all that one. Other things out there. Do you guys use support and resistance? Well, remember, support and resistance is just an anemic view of supply and demand. Support and resistance says, here's a line, it's going to turn right there. And that's not the way prices work. There's generally a range of prices, a zone, which would be, instead of a support line, it would be a demand zone. It's a range of prices. So that's why I'm not a big fan of support and resistance. Pro35 says, when is a limit order better than a market? Here's where Tillie and I totally disagree. I love using market orders. The reason I love using market orders is because I'm buying something because I want to get into it. I want to own this. And if it's moving and I do a limit order, I might not get those shares. So for me, market orders are good. You just have to know the risks. If you're trading something that is thinly traded, doesn't have a lot of volume, what you get is, as you point out, Pro35, a wide spread, which means I'm already giving up some money. But each subsequent level might not be 1 penny apart. They might be 5 cents or 10 cents apart. Now, that's kind of hard to explain without a visual here, but there's all these price levels of buyers and sellers lining up. And if I do a market buy on something that's thinly traded, yes, I'm giving up the spread, but I might take out 2 or 3 levels of sellers, and all of a sudden I spent 50 cents more than I wanted per share. You're like, well, how does that happen? That's risk of a market. Limit order is great because it prevents you from taking slippage. The risk is you may never get filled. I like to use both of them, but market orders are certainly a part of what I do, especially if I just have to bail on something and need to get out. I'm happy to use a market order just to dump those shares and move on. But that's just me, just my way of trading. I'm going to take this away from Goldman Sachs. Joseph says, is there a way that you can accurately ID when Goldman Sachs is buying an equity, let's say, the demand zone? Can you pinpoint, Tillie, and say, hey, that's this firm when you see it on the chart?
Well, I would say that the bigger the move or the bigger the move over time is likely the bigger the company. Mm-hmm. So given that Goldman Sachs, Bank of America are the 2 largest that we know of, banks that also do a tremendous amount of active trading. But back in the day, in the market breadth, they used to actually have Goldman Sachs ticker and Bank of America ticker on the market breadth window, like the window that shows all the bids and the offers and the bid and the ask. So back in the day, you could actually see their symbol. And but then they started slicing and dicing up all the orders, of course. And now they use electronic networks, and they don't even trade under their own name. So I don't believe by looking at a chart or the data at the exchange that we would ever know who exactly it is, because they don't really want everybody knowing their business, literally.
Yeah, and the reason I'm saying this one kind of cynically is there is an individual out there who, it's funny, he follows me on my Facebook and my Twitter, who claims through his education that he can definitely spot Goldman Sachs when he's out there buying. I'm going to say this as politely as possible. That's total bullshit. There's no way you could spot Goldman unless you knew the trader who was selling or buying at Goldman and you were over his shoulder, because they use so many different networks. They use dark pools. And as Tillie said, Goldman's symbol used to be GSCO. I could look at a level 2 screen and I could see him selling. And I'm like, okay, if the big dog's selling, what do I want to be? Right in front of him. I'm selling that too and let him push that market down. He'll never use his name on the inside competitive bid and ask anymore. Neither will Morgan Stanley, neither will Merrill Lynch, neither will any of the major firms will not use their name. So the person who told you that you could see Goldman Sachs guarantee when you buy and sell is absolute BS. You shouldn't even listen to this guy. I just can't believe he's still talking about it year after year after year. It's still like people still buy this stuff, Tillie. It drives me nuts.
Yeah, his ticker ought to be BS.
True. There, good. All right. Patrick asks, is there a place where banks tell you when they get their stops hit? Is there a place where banks tell you when they get their... You mean, is there a place that they can see your stops and take it out, Patrick? I think that's what you're asking. Truth of the matter is, your order, once it goes into the market, is kind of public knowledge. Not public knowledge, but like, let's say, for example, TradeStation. TradeStation, if I put a stop order out there, that order doesn't go through to the exchange. It's triggered on the software of TradeStation. So anybody who worked at TradeStation could see my stop. Same thing, anybody who worked at Ameritrade could see your stop. Not necessarily that Goldman Sachs can see your stop loss if you placed it on Ameritrade, right? If it's that brokerage firm, heck yeah, they can see your stops, and they can and may take you out when they feel like it. The beauty of markets.
Yes, and if that stop is where they want to do business. So, for example, if you buy and you put your stop very near where you bought, like say you buy some at $30 a share and you put your stop at $29.90, which is a sell order. Remember, nobody knows that that's a stop loss. When the orders go in, the word stop is a trigger to a buy or sell order. So all that exists in the market are buy and sell orders. So if you put a sell order where they want to buy at $29.90, it's going to hit that order. It's going to sell you out, close your trade. And for them, it's just a way to buy lower. Mm-hmm. So anytime somebody gets, quote unquote, stopped out, no computer out there is ever referencing that buy or sell order as a, quote, stop loss. That just doesn't exist. So that usually happens when people put their stop orders too close to their entry and somebody trades against them. Not to be malicious or take them out, but just to buy the product at a better price. Right.
Well, you should always keep it as kind of a grain of sand. I just lost my train of thought. You kind of keep it as in the back of your mind that you are potentially trading against that firm. That's just, you should always be thinking that way. Because remember, every time you buy something, somebody sold it to you. And you have to ask yourself, well, why did they sell it to me? Vice versa. Every time you sell something, someone bought it. And one of the two people is right in the long run. So I always have this jaded opinion about institutions. Certainly Goldman Sachs was one back in the day that I followed religiously because I could identify him and I knew he was a big player. Nowadays, guys, they want to be anonymous and not be seen in the marketplace, and they'll do everything in their power not to use level 2. And I'll tell you, I don't really use level 2 anymore either. Tillie, tell me about what's going on in your schedule. I want to, we did the chart of the week, by the way. Not chart of the week. Tillie's Market Outlook, which was great, by the way. You already went through your 60-minute time zone. I noticed we're sitting right in the middle of that 4-hour time zone. You think we're going to get those weekly all-time highs?
Probably not this week. It will take some time to get up there, but the market does appear to be trading higher, obviously, and we have already traded above that 60-minute. We broke through that clearly today, closing at 324.36. So, yes, we are trading on that 240-minute chart. And I do anticipate over time it will go to those all-time highs again, and that's going to be like crazy exciting when we get there. But we could always see, pullbacks. I wouldn't be surprised at all if we get a pullback. We created new accumulation areas this week, or even drop down to a previous one. Because my question, my thought is, are the big boys, are they loaded? Do they fully accumulate all of their shares? And so that's why I like that word accumulation, because at any given time, the market can trade down very quickly and then rally back up because they're going to accumulate those shares.
Well, there you guys have the chart on the left hand on your screen here. We ripped up today. I mean, to talk about a beautiful 4-hour time frame, these two giant green candles here, a little bit off the highs for today, but right in the middle of that 4-hour time zone. We'll have to see how the rest of Tillie's Market Outlook levels post. You guys can pick those up at the YouTube channel under TraderMerlin. If you go to the playlist, there's actually one for Tillie's Market Outlook that I built out, and we'll be hopefully making it look a little bit better going forward. So, Tillie, thanks so much. You got any classes coming up here? Anything you want to share with our students or our viewers? Our students. We're all students.
I am super excited because hopefully here in Kansas City, I'll be a little more involved with students, what they do before class and what they do after class. And you know how it is. Whenever you teach one class out there, if you only teach the one class and you're not there after graduation, if you will, through the process, I'm really excited to be more a part of that and help. We have tremendous online activities and trade rooms and all kinds of great stuff at OTA. And so many of our students, whenever they graduate from class, they, don't know what to do. And since I'm hanging around all day looking at all that stuff anyway, I better not spend my day than, me, I love people. So I'd rather be showing somebody else how to log into a trade room and just do it by myself.
Nice. Well, Tillie, thanks so much. I always appreciate you coming on. I look forward to our next Tillie's Market Outlook, and I'll probably see you next week.
Awesome. Thanks, Marlon.
All right, Tillie, take care. Thank you.
Cheers, everybody.
Guys, Tillie Allison-Harris, our guest today, talking about El Mercato, talking about the market, talking about pre-market routine and the Globex session. For Tillie, finds it very valuable. I do as well. Just remember that pre-market, you have a lot less volume. So to me, the truth behind a supply or demand or accumulation distribution, as Tillie points out, might not be as strong as during regular market hours. And of course, it goes without saying that you want to trade the stuff that's the most liquid as well. I'll give you a little bit of a benefit there. Sorry, Patrick. As a beginner trader, is focusing on smaller amount of tickers better? Yes, Adam, I would think so. What I would do, Adam, here, if you're just starting out, you probably would be best just looking at, I know I'm going to get some backlash on this one, but just looking at something that doesn't move as fast and has great liquidity, like the QQQ or SPY. Right? You're trading the whole market. That way, as you start to get better, you'll really learn how the market is moving. And then from that point, you can break it down and say, okay, right now we got semiconductors and technology real strong. What are the big movers there? And then maybe start to look at some of those titles. But get your feet wet when something that's not ripping and just always having 5, 6, 8% days. Amazon today was just nuts with their 7% move. That's not going to be the case for an overall index. You're probably not going to get caught or whipsawed like you would trading individual securities. So I would recommend that. So start off with just a few ticker symbols, preferably indexes, just to get you going here at the very beginning. Okay, I had let me get the economic announcements, and then I will go to some listener questions here. This is what we've got cooking for tomorrow. 21st is going to bring us nothing for the U.S. It's relatively quiet here in the U.S., but we do have some interesting numbers coming out for Canada. The retail sales numbers are expected to come out tomorrow morning. That's 5:30 in the morning, so that's an hour before the market opens. You can see here we've got a 20% increase in retail sales expectation, which is a huge difference between the negative 26% contraction the previous month. Crazy one right there. So the big change in that expectation. I don't know. I think 20% might be a little bit lofty. I think we saw it the other day. Was it for the U.S.? Talking 5.5% increase, and I expected more, and we came out at 7.9. I think we'll come out a little bit less than 20% gain for retail sales for Canada. We'll have to wait and see how that one pans out. But anyway, that's it for major economic announcements. You do have manufacturing numbers for Japan, but all in all, not that critical. Let's go forward one, and I'll show you your earnings calendar. Now, it's starting to kick off, guys. This is really the beginning of the big move, and I made a mistake last week. Or maybe I didn't. It was, let me finish this, and I'll tell you. Here's what you have for tomorrow. You've got Novartis, and this is all sorted by market capitalization. So you can see you got the $200 billion market cap. $200 billion market cap company, Novartis, Coca-Cola, Texas Instruments, Philip Morris, Lockheed Martin, Intuitive Surgical. That will be a wild mover for sure. Prologis, Canadian National, UBS Group, what else? Capital One, TD Ameritrade, and many, many, many more. You have to understand, guys, that there are 489 companies reporting earnings this week. 489. So there's a lot of movement in any sector this week, right? It's always going to be something moving. Last week, the earnings calendar I looked at actually showed that Amazon was going to be having earnings on Thursday. Was it Thursday? Yeah, and that is not. It's going to be the next Thursday. So I believe the 30th of July is when they are coming out with their earnings. So that got bumped. But we do have two this week. We have Microsoft as well as Tesla. Now, Tesla is not one of the FANG stocks, but it could potentially be in that group. They're reporting earnings on Wednesday, and you also have Microsoft, which is one of the biggest market capitalization companies in the world. By the way, just to see a little engagement here and see how you guys do, how many companies right now have a market cap of over $1 trillion? How many of the publicly traded U.S. companies, I know you might say some other international, nope, I'm talking traded on the U.S. exchanges, how many have a market cap of over $1 trillion? Any guesses? Bueller? All right, as I wait for you guys to settle into that one, I'm going to bring up some charts here real quick. And we'll go back and look at some time frames here. Anybody else? No one wants to guess how many stocks have a market cap of over $1 trillion? $1 trillion. Joseph gets the prize today. I wish I had a prize department or money because you beat Big Eb. It's actually 4. Well, you know what? I guess I need to go to Raj because technically you could argue that it's more than that. two symbols come out of one. If you look at this, I'll show you guys real quick. I'll go and show you my platform over here. I'll show you a watch list that I created. And I did this just for market cap. Where's that page? I had one page I set up just for market caps. There it is. I'm going to double click on the header here, and you guys will see if I roll this up. You can see there's 5 line items, but GOOG, G-O-O-G, as well as G-O-O-G-L, those are different grades of shares or classifications of shares. Both of those are over $1 trillion. So it's kind of weird to me that's the case. I'd have to look into this one, but that almost would allude to the fact that Google has a $2 trillion market cap, right? If you have 2 separate companies and each one has a valuation of $1 trillion. So not quite sure how that is, but you have Amazon at about 1.477, Microsoft at 1.5 trillion, and Apple at 1.6. I will put my money on Amazon reaching $2 trillion before all others. There you go. Cool. There you guys go. Yep, Armando, Apple, and Amazon are definitely on the list. And Amazon had a big bump today. Let's look at that chart real quick just so you guys can see that one. Amazon was just gorgeous. That's what rallied that NASDAQ. AMZN is what we've got. Coming right back up to those highs. You know, we had that 4 or 5 day sell-off and just ripped right back up to the very, very top. So nice move up to 31.96 on the Amazon chart. Now, as far as markets go, this is all going to be muted numbers here because it's after hours. You had Bitcoin really not doing anything. You can see the daily just drifting sideways. Gold back to 1819, so that's looking pretty good, but still sideways consolidation. The Russell, after some pretty volatile moves, was only down 0.1% today. Why not? This numbers look odd to me, I'll tell you that. Here's your NASDAQ. This is because the Amazon effect. It's at 10,947. You know, we did breach that 11,000 mark on the triple Qs back in July 13th. Today, we hit an intraday high of 10,964. So real close to breaking above and getting a close above 11,000. S&P 500 also in a very, very, very positive place. Why? Because we broke above those highs we established in June. And right now, it doesn't look like there's anything to stop this till we get to all-time highs. So just sheer craziness as to why this thing keeps rallying, but it is. And there's your crude oil. We're still stuck on that flat line. You know, we were calling this an ascending triangle for a while. Now it's almost completely flatlined here, right at this $41 level. So interesting one for crude oil on today's trading activity. All right, guys, that will do it for me. Let's say market cap. Yeah, I'm going to look at that one, Mike, because that would make Google have a market cap of $2 trillion, and that would be noteworthy. So I think that means that Google's market cap is $1 trillion, but overall it's split between 2 different shares. That's what I think. All right, guys, that will do it for me today. Tomorrow, there was going to be a new guest on the program. You guys have been asking to have Gabe Velasquez on the program. Well, lo and behold, I'm going to have him on the show tomorrow. We'll talk about markets. There was actually something that I had on the calendar. I can't remember exactly what we're going to talk about. He's going to talk about kind of his morning routine. He does this morning market momentum piece, and it's a pretty cool the way he analyzes things and breaks things down. So we'll talk about that with Gabe Velasquez tomorrow. If you guys have questions, you can feel free to send those on in. Of course, you know the way to do that. You simply go out to TraderMerlin.com. There's a little page right there that allows you to send all the questions that you want, little question form. Send them on in if you have comments, questions regarding the show. Obviously, I love to hear all of that stuff. It helps me out knowing whether it's good feedback, bad feedback, or whatever. All right, I was trying to bring up this piece right here, which will pop up my calendar, and it is telling me that tomorrow's show with Gabe Velasquez is called Morning Market Methodologies. That's his triple M3 or M3 thing he likes to talk about. We'll talk about how he views market data, which is nice because I think you'll get a second perspective on what we talked about today. It kind of is mind-boggling to me that you can have all these amazing traders. Gabe's phenomenal, Tillie's phenomenal, Bob Dunn's amazing, Craig Weil as well, all looking at that same window of time that we talked about, that pre-market window with Globex. Some going, yeah, 2 thumbs up for me. Others going, don't even want to look at it. Bizarre the way that works. We'll see how Gabe uses it. I'm pretty sure he's a practitioner in that space with the pre-market because I know he loves the morning session. He's an early bird. I, for one, am not an early bird. All right, guys, that will do it for me for today. Thank you guys so much for the contributions today. I saw we had one very early on from Siraj, so I appreciate that, Siraj, for the donations you made today. We'll hopefully have a great show tomorrow with Gabe Velasquez, so send in your comments and questions. Hit that like button if you're new. Subscribe to the channel, and I'll do my best to get Scott McCormick on the program one of these days in the near future. That'll do it, everybody. Thank you. See you tomorrow.